You have worked hard this year, and after paying a good chunk of your income to HMRC, there is something finally left in your pocket. Now, you want your money to work for you. So, you decided to invest £10,000 in some shares, hoping that your wealth will grow and skyrocket and you will earn while you sleep. But here is the catch: HMRC is your sleeping partner. Let me tell you why. So, when your investment generate dividend income, and if that dividend is above £500, you are going to pay dividend tax, assuming you have lost all the personal allowance. And £500 is basically the new rate band available to every individual, irrespective of the tax band in which they fall. So if it is above £500, you are going to pay dividend tax. After some times, after a few years, let's say your investments grew and you have earned decent returns. So when you sell those shares and realize those returns, you may also be paying capital gains tax. Even though your investments have performed really well, there is certain portion that still goes back to tax authorities. But what if I tell you that there is a completely legal way of generating those returns tax free? Yes, and I'm not joking. There is a way out. You can earn all your interest income, all your dividend income, and all the capital gains returns without paying any tax. Yes, and this is what we are going to discuss in today's video, which is about ISA, Individual Savings Account. So we are going to discuss what ISA is, how it works, what are the eligibility, what are the condition, what is the limit, and many more things in today's video. So if you want to save your taxes and want the piece of cake to be eaten fully by you instead of giving a certain portion to HMRC, then this is the video for you. So let me start off with the Excel that we usually start with. What is an ISA? ISA is a tax efficient investment available to UK residents. It is available to UK residents only. It allows individual to save or invest money without paying income tax or capital gains tax. And any return you generate on ISA account is completely tax free. No income tax, no capital gains tax, and no capital gains tax on your returns. Okay. So let me give you a diagrammic representation. So let's say you have earned income during the year. So let's say during the previous year, you either had a business from which you earned income, and you might be a salaried person. So you would have earned salaries. So you go and invest those, you want to invest those amount. So instead of going through a typical way, you go via an ISA account. ISA is a tax shield, it is a tax wrapper. So any investments, so anything that goes from ISA becomes completely tax free. Okay, so ISA is a type of funnel which makes all your investment income tax free. So your personal savings goes from ISA and you get tax free returns. What is the limit of ISA? The ISA limit is £20,000. So you could invest £20,000 via an ISA account without paying any tax on the returns generated on it. What are the types of ISA? There are 4 types of ISA, and that £20,000 could be split in any way that you want in all those 4 types of ISA. So let's firstly talk about cash ISA. Cash ISA is similar to a normal bank account that you open generally, but in this bank account, in this ISA account, you are not going to pay any tax on the interest income, which usually we pay via a normal bank account. Okay, if I have a normal bank account and I have deposits in it, I have deposited all my savings in it, I am going to pay interest. I am going to pay tax on the interest income. Now, next one is stocks and shares ISA. So instead of going through a usual way of investing in stocks and shares, you open an ISA account and invest via that. So which helps you to invest in shares, funds, or any bonds and any other investments without any tax. Okay, but here the things are a bit riskier because stock market is dependent on some market conditions and it is risky. So it is riskier than cash ISA, but still, if you earn any dividend on any capital gains from this account, you are not going to pay tax on it. Next one is innovative finance ISA. This is usually used for peer-to-peer lending, right? So there are separate platforms via which we can lend money. There is no intermediary, there is no bank. So normally banks do a business from collecting money from customers and then lending to the businesses so that they can generate interest. Now you go directly to the end lender and you lend them money, and generally the interest is higher because finance 101, because whenever your risk increases, your returns increase as well. So as you go from cash ISA to innovative finance ISA, your returns will grow, but again your risk will also grow. So you have to understand the risk of innovative finance ISA. Fourth one is lifetime ISA. Lifetime ISA is a special type of vehicle which is designed for savings. So people savings for their first home or retirement, right? They can do it via lifetime ISA. There is a limit of £4,000 each year that you could invest in out of that £20,000. So £4,000 could be invested via lifetime ISA, and you can invest £4,000 until you are 50, but you must make your first payment before you are 40, right? The government will add a 25% bonus to your savings up to maximum of 1,000 per year. So let's say if you invested a full amount, that is £4,000, the limit, you are going to get £1,000 per year from government as a bonus. Okay. This is a benefit. This is really a great benefit if you are saving towards your first home or retirement. You can withdraw your money from this ISA if you are going to buy for legitimate purposes. As you when you enrolled in ISA, what you have thought of to buy a home or either save for retirement. So if that is for the same purpose, you can withdraw your ISA tax free. But if there is any other reason you want to withdraw your cash, you will need to pay withdrawal charge of 25%. And that withdrawal charge is not on £4,000. It is on the total pot. So 1,000 invested by government and 4,000 by you. In total, your pot had £5,000. You are going to pay 25% of it as a withdrawal charge, which is 1250. So you have to be considerate about investing in this ISA, right? Because whenever you are going to withdraw for any other reason than the stated above, you are going to pay much higher than you have received from government. What is the eligibility for enrolling in ISA? You must be 18 or over to open an ISA account. If you are opening a lifetime ISA, you must be under 40, as we seen in that condition. Also, you must be either a tax resident, UK resident, or a member of armed force or a crown servant, or their spouse or civil partner if you do not live in the UK. There is another ISA which is for juniors. So if you are below 18, you have junior individual savings account, which is basically for children's, and the limit is £9,000 a year. Your child must be both under 18 and living in the UK. Okay. Next thing is flexible ISA. If your ISA is flexible, there are different types of ISA depending on where you invest in. So if you have ISA, which is flexible, you can take out the cash and then put it back during the same year without reducing your current year's allowance. So let's say you invested in around 10,000. Let's say you invested, £10,000. Okay. So you will get a limit of, right? £10,000 is still left. What if I sold £3,000 of either cash or either shares, right? Shares basically. If I withdraw those cash or I sell the shares, let's say I sold £3,000 of shares because that was not generating good return for me. I sold that. So what do you think the remaining limit would be? Is that 10,000? I have sold this from the 10,000 investment made by me during the year. So I have £10,000 still left to invest. But in a flexible ISA, when you sell your shares, your current year allowance again goes 13,000. You can still invest 13,000 instead of 10,000, right? Because if you are in a flexible ISA, your balance won't reduce. So out of 10,000, you sold 3,000. So it does not mean that you already invested 10,000. So you are only left with 10,000 pound. Because it is a flexible ISA, you can also invest 3,000 pound again within the flexible ISA. Okay. Now within this four types of ISA, you might be wondering what is the allocation. You can do allocation anyway, and you can you can make transfer in any of the ISA during the year. On the death, what happened on the death? There will be no income tax or capital gains. So till death, there is no income tax or capital gains tax available. Like you won't pay any tax. So ISA is with you till your death, and but there is still a part of IHT that you because it will fall in part of your estate. So there is one benefit as well, because if you die, right, your civil partner can inherit an equal amount of your ISA pot in ISAs. Okay, so basically their limit increases. So if it is 20,000 pound, okay, if it is 20,000 pound, and let's say husband has left 1,40,000 pound in ISA, that 1,40,000 pound uh, would be forming a part of your estate. That 1,40,000 would be added while paying inheritance tax. But the other thing is that your wife can also contribute 1,40,000 additionally the ISA limit. So yeah, this is the benefit, which is called less additional permitted subscription, which allows surviving spouse or civil partner to inherit an extra ISA allowance equal to the value of the deceased partner's ISA at the time of death. So if your partner has left any amount, that amount you could also invest in ISA without paying tax. Okay, that increases your overall ISA limit basically. Okay. Okay. To sum up, there are few updates that we have got in the autumn budget recently, that from 27-28, this 20,000 limit, which is currently available for people under 65, would be divided between cash ISA and stocks and shares ISA. So earlier it was that you can either invest whole 20,000 pound in cash ISA, you can take it in stocks and shares ISA, you can invest in any of them. But now what they did is they have limited the investment that you could make in cash ISA. Okay, so out of 20,000 pound, you could only invest 12,000 pound in cash ISA. Remaining should go to stocks and shares ISA, right? Stocks and shares ISA could also be higher, but the limit is on the cash ISA part, right? This is to encourage investment. I don't know if that would help really. And it is for people under 65. So if you are above 65, the rules still follow the same as we are doing currently. But from 27-28, it is still 1 year afterwards we are making the video. So from 27-28, the limit would be divided between cash ISA and stocks and shares ISA. The transfers from stocks and shares ISA to cash ISA may be restricted. And this is also another condition which may come in 27-28. We can get more clarity afterwards that transfer from stocks and shares ISA to cash ISA would not be as flexible as we currently have. It would be restricted if you are under 65. So if you are over 65, they have given you a scope that you could make transfer and invest whole amount in cash ISA, because you may not be capable of taking such risk to invest in stocks and shares. Yeah. So this is all about ISA that we have discussed. Okay. If there is anything that you would like me to cover regarding ISA, or anything left off that you could explain me better, right? That I could also like explain in the next video in a detailed way, you can comment it out. I will be happy to make that video. And if there is any other topic that you want me to make video on, you can comment down your suggestion. Thank you for watching this video. You can join our WhatsApp community and you can follow us on LinkedIn to get latest updates regarding UK accounting and other ACCA related, exam related courses or some tips and tricks. So yes, thank you for watching the video. Subscribe our channel. If this video was helpful, like our video. Thank you. Thank you so much.